bull versus bear segment. Laurus Labs in focus. Stock has taken a tanking, and this is despite the fact that management has come out and clarified. So Varsha's here giving us that perspective of bull versus bear. Would you buy or sell, Varsha?
Thank you, Harsh. But you know, Harsh, there was this time when Laurus Lab had a very roller coaster ride kind of thing, and when finally the things were improving, and we even saw the stock was up 5% on Friday. There comes a news wherein the stock is tanking like 12%. But let's see what are the positives and negatives for this company. If I were to talk about the numbers, if you see the top line was supported by higher CDMO business, which grew almost 80%, and which is the next leg of growth for Laurus Lab. But on the negative side, if you see, this growth was tempered down by API business, which was weak, and according to the analysts, the growth sustainability is actually uncertain when it comes to Laurus Lab. So good show when it comes to CDMO, which is the next leg of growth, but again API business did suffer for the company. Also, the capacity expansion for the companies is in line, which is a good thing. But moving on, if I were to talk about the margins, so they actually returned to 20% of EBITDA margin. Now, this is first time in the last 7 quarters, which is actually the highlighting factor. And even management in their con call have reiterated that they're gonna have a 20% of EBITDA margin for FY25. But to do that, for Q4, they have to do 28 to 30% of EBITDA margin. If that goes well, we can see the Q4 margins will be very good. But the bear case, if you see, US a pause in foreign aid is actually bad for Laurus Lab. But company has come out with a clarification that the revenue only contributes 10%. The contribution to the US, that is the ARV business, is only 10%, and only 3 to 4% when it comes to EBITDA. So not much effect when it comes to Laurus Lab, but still, if you see, the stock is down almost 10%. Moving on, lastly, if I were to say, the company has given a 20% EBITDA margin guidance, which is actually good for them, because Q4 will see 28 to 30% of margin, which is a huge jump from last year, and of course the Q3 which we have seen. But there are analysts wherein they have said that there's concerns when it comes to valuation, and we may see the profit booking going forward. So all in all, I would say, Harsh, that a pretty good set of numbers, but Q4 is the one quarter which will actually determine whether Laurus will fulfill its target of 20% EBITDA margin. We'll see that.
Right, thank you so much for breaking that down for us, Varsha. In fact, we spoke to the CEO of the company, Satya Narayana, about how the freeze of new funding for foreign assistance programs will impact Laurus Labs. Listening to a slice of that conversation.
I think our activity picked up just before COVID and accelerated during COVID. And we see that acceleration still continuing. Because of the number of RFQs we are receiving, number of customer visits we are hosting, I think that is continuing.
All right. So also, in H2, the indication was that margins could be somewhere around 25%. So at this point in time, how are you looking at margins panning out? And do you think that towards the end of the fourth quarter, there could be a substantial shift in an increase in margins so as to catch up with the expectations of the markets as well as your indications?
If you look at our Q3 numbers, which we announced last week, we have achieved 20% EBITDA margins. And in the investor call, we also reaffirmed our earlier statement. By end of this financial year, we expect to have EBITDA margins for the whole year closer to 20%, and we still committed to that statement, which means that our Q4 has to be better than Q3, and which we also indicated because of the order book what we have, because of the deliveries what we are doing in Q4. Q4 will definitely take our whole year margins to closer to 20%.
All right.
Yeah.
So I also want your view on the animal health business. How are you expecting it to pan out? What kind of contribution do you think that it could start making in terms of significance as we move into the new financial year of FY26?
See, we have built a new site for animal health, and the site was inaugurated April, May last year, and we have done validations of 2 APIs, and we expect to complete another API during this quarter. We also received orders, commercial orders for the validations what we have done, and as a standalone business, animal health will do very well in FY26.
Okay, so that's of course conversation with the management of Laurus Labs. Siddharth, would you at all venture and suggest that as part of your estimates or MOSL's estimates that Laurus will be able to clock at least a 20% plus kind of EBITDA number for full year FY25, even though that itself is looking like a tall ask? And what's the impact of this in your view, the halting of AIDS funding? Do you believe that that will also impact the company? 12% lower in trade today.
Yeah, Harsh, I think definitely, see, there is a near-term impact because of this. While the management has clearly said that, and we have the rough cut estimate that about 20% of total ARV sales of Laurus is from is being funded by the PEF AR program. So in terms of EBITDA, I think consolidated sales would be about 9% that can get impacted. Margins, EBITDA, if you see about 5% contribution, these are low margin business. So we believe that on an EBITDA level, there could be a 4 to 5% impact for FY26. And in our estimate, before taking this impact, we were expecting about 18.5% kind of margins. I think that could be again a little bit under pressure, and more so for FY26, whole of FY26, that could now come around that or just below the 20% mark. Our estimate for FY26 was at about 21.8% margin based on what the management highlighted in terms of growth. So Q3 number, if you look at after almost 6 quarters of decline, we saw strong improvement in financial performance. The company has invested considerably in the CDMO segment to build capabilities to cater to the customer's manufacturing requirement. And there are certain contracts in hands that would be executed in the medium term, which could push the margins on the higher side. And on back of this sharp improvement, even if there is some tempering down, we believe that 65% earning CAGR over the next 2 years is possible. And hence, the sharp punishment from the market is definitely unwarranted, is what we believe. A 5 to 10% correction is already factoring in the decline. We would anyways wait for the market to become stabilized, but we have a positive view on Laurus. We have a buy rating that we came out after the results.
That's the fundamental view coming in. Hemen, your quick take with regard to charts. Laurus 12% lower.
286.20, Harsh. I don't see it going too much beyond 500. Okay, I think looking at the volume, it's shot through the roof. Maybe I'm jumping the gun here a little bit, Harsh, but I think a panic bottom has been made. We needed a retracement, like I said. 286.20. I don't see too much of downside below 500. If it closes on the weekly chart only and only below 500, then I would turn a bit bearish, but otherwise, no, I think it's done.
Perfect. All right. So more positives than negatives here on Laurus Labs. Let's slip into a very short break. On the other side, we'll get you top BTST ideas, as well as talk about a little bit about some of these lenders, smaller ones, IDFC, AU Small, taking a real knock in trade. Interesting to get perspective on those.